All right, let's jump right in, shall we? Today, we're diving deep into Public Bank Berhad's financial performance in 2024.
Looking forward to it.
Now, we both know you're all about getting to the point, so no beating around the bush. We're going straight to the good stuff, analyzing the raw financial data to understand the story it tells.
Exactly. No need for secondhand interpretations here, just pure financial data speaking for itself.
So think of this as learning to read the language of this major Malaysian bank, understanding its wins, its struggles, the whole picture.
Kind of like having a backstage pass to see how the bank operates.
Perfect analogy. So first things first, we got to talk about the elephant in the room, Public Bank Berhad's total assets. For 2024, they hit a massive RM, 542,863,078,000.
Wow, that's a significant jump from the previous year.
Right. But before we pop the champagne, we got to see how liabilities and equity fit into this. What do you think?
Great point. Liabilities, which mostly consist of customer deposits, they also went up quite a bit.
And what does that tell us?
Well, it's actually a positive sign. It means people trust Public Bank with their money. But what's crucial is that the bank's equity grew too, showing they're not just holding on to those deposits, but using them actively to generate profits, strengthening their foundation.
So a potential investor would be pleased to see this.
Absolutely. And speaking of investors, let's look at net assets per share. This number went up from RM 2.82 to RM 2.97, meaning each share represents a bigger piece of the bank's assets.
So potentially more dividends for shareholders.
And maybe even an increase in share value. It's definitely something to consider. But let's shift gears a bit and talk about their actual business, the nitty-gritty of making money profitability.
Right. Got to see how they're doing in that department.
Well, the Public Bank Berhad Group reported a profit of RM 1,669,681,000.
Which is?
A slight increase from last year. However, if we zoom in on the bank itself, excluding subsidiaries, the profit jumps to RM 1,747,820,000.
Interesting. So their main banking operations are performing well.
It seems that way. The report goes a step further, breaks down the profit sources into different categories.
I'm curious about that breakdown.
Ah.
Let's start with net interest income. Seems pretty self-explanatory, right?
It is, actually. It's the classic banking model, earning interest on loans and paying interest on deposits. Public banks saw a decent increase in their net interest income in 2024, suggesting their lending business is doing well.
Makes sense. The good old borrow low, lend high strategy. But there's also net fee and commission income. What falls under that umbrella?
Think of it as the bank's service charges.
Service charges.
Yeah, managing your account, processing your credit card transactions, handling those international transfers. These all generate revenue for the bank. It's basically income from providing various financial services to customers.
So it's not just about loans. They have multiple streams of income.
Yeah.
Okay, what about this net gains on financial instruments? Now, that one sounds a bit more complex.
It might seem that way, but essentially it boils down to their activities in the financial markets. Buying and selling bonds, currencies, that kind of thing. Some of those transactions bring in profits, some losses, and that's reflected in this category.
I see. A window into their investment strategies. Fascinating. Now let's talk about their loan portfolio, a significant part of their business, wouldn't you say?
For sure. It's actually a big one. Public Bank Berhad's total gross loans and financing reached a whopping RM 424,170,971,000 in 2024. That's a lot of money being lent out.
Wow, that's a staggering figure. Where is all that money going?
The majority, we're talking over 85%, goes into retail loans.
Retail loans.
Yeah, loans given to individuals, mostly for housing, vehicle purchases, and credit cards. The rest, that's corporate loans going to businesses.
So they're playing a big role in financing the daily lives of Malaysians.
Absolutely. But lending always comes with its own set of risks.
Right, those impaired loans we talked about earlier.
And that's an important point, especially for potential investors. While the ratio of impaired loans to total loans remained pretty stable, there was a slight uptick to 0.52% in 2024.
So a slightly larger portion of loans are at risk of not being repaid. Not a huge jump, but definitely something to keep an eye on.
Exactly. It's a balancing act for them. Lend enough to generate profit, but also manage that risk carefully.
Speaking of strategic moves, Public Bank Berhad made some big acquisitions in 2024.
They did. Two particularly stand out: Public Bank Lyle Limited and LPI Capital BHD.
Let's start with Public Bank Lyle Limited. What's the significance of that acquisition?
That's all about expanding their footprint within Southeast Asia. They're getting direct access to a new market in Laos, which has a growing customer base and potential for increased profits.
So they're thinking long term. Now, LPI Capital BHD sounds like a whole different ballgame.
That's right. LPI Capital BHD is an insurance company signaling a diversification move for Public Bank Berhad. They're stepping into the insurance sector, branching out from traditional banking
Like
services.
they're spreading their wings, right? Not putting all their eggs in one basket.
Yeah. Exactly. It could open up opportunities to offer bundled financial products, attract new customers, and build a more diverse financial ecosystem.
Okay, so we've seen a lot of positive growth, but the report also mentions challenges, right?
Yes, definitely. They specifically point out a challenging operating environment and market conditions, which have impacted their Hong Kong operations.
And that led to
A goodwill impairment charge.
Goodwill Impairment. That sounds a little ominous. What does it mean exactly?
Essentially, goodwill is the extra amount a company pays for an acquisition over and above its book value, usually reflecting intangible assets like brand reputation or customer relationships. An impairment charge means they had to reevaluate the value of their Hong Kong operations, likely due to those tough market conditions.
So it's kind of like realizing they might have overpaid because of unforeseen circumstances, like economic downturns or maybe increased competition.
Exactly. But it's important to note that this impairment charge is a non-cash item. It doesn't directly impact their cash flow or lending capacity.
Okay, that's good to know. So we have some challenges in certain markets, but overall, wouldn't you say Public Bank Berhad had a pretty solid year?
From a purely financial perspective, definitely. They've shown resilience and an upward trajectory.
But as always, there's more to the story about this.
We still need to consider several factors as we look ahead.
Like,
Well, the report highlights their focus on supporting homeownership, small to medium enterprises, expanding into wealth management, and pursuing green financing. These are all trends that could significantly impact their performance in the coming years.
it sounds like they're actively adapting to the changing market and societal values. But there was one thing that really stood out to me in the report,
Oh, what caught your eye?
their emphasis on cybersecurity. They actually prevented a significant amount of fraud, saving their customers quite a bit of money. In today's digital world, that's a big deal, don't you think?
Absolutely. It shows their commitment to protecting their customers' assets and building trust in an increasingly digital environment. This focus on security could really set them apart from other banks, especially for those customers who prioritize safety.
It's definitely something to think about. So we've covered a lot in this first part of our deep dive. We've looked at Public Bank Berhad's performance, strategies, even some challenges.
And we've just scratched the surface. There's so much more information in these reports waiting to be explored.
Exactly. As we move into the next part, we'll be taking a closer look at their operational efficiency, asset quality, and capital adequacy. So stay tuned. There's a lot more to uncover. All right, welcome back to our deep dive into Public Bank Berhad. We've gotten a good overview of their financial health, seen some of their strategic moves. Now let's zoom in on some key aspects of their operations, really put on our analytical hats.
Sounds good to me.
Okay, so one area that often gives us a peek into a bank's performance is operational efficiency.
Right.
And a key metric here is the cost-to-income ratio. Now, essentially what this tells us is how much the bank is spending for every ringgit of revenue they generate. So a lower ratio.
Means they're running a tighter ship, spending less to earn more.
Exactly. So a lower cost-to-income ratio means they're managing expenses effectively, a good sign for profitability. And Public Bank Berhad actually has a pretty good reputation for being efficient, something we can actually see in their 2024 report.
Definitely.
Their cost-to-income ratio for Malaysian operations, get this, is 26.2%,
Impressive.
especially compared to their overseas operations, which are at 36.0%.
Right. They're definitely more efficient on their home turf.
Yeah. So this difference could be due to a bunch of things like economies of scale, different regulations, maybe even the types of services offered in those different markets. Something worth looking into, especially if you're thinking about investing.
Sure. Now, another term that pops up a lot is asset quality.
Asset quality, yeah. What does that even mean when we're talking about a bank? And why should I care?
Well, asset quality basically refers to the health of their loan portfolio.
Yeah.
We talked about those impaired loans, those at risk of not being repaid.
Right, right.
Asset quality takes a broader view. We're looking at things like loan diversification, the value of the collateral backing those loans, the overall financial health of the people borrowing money.
So it's all about making smart lending decisions, minimizing those chances of loans going bad.
Exactly. High asset quality suggests they're lending wisely, minimizing their risk. Good news for everyone involved. The bank's more likely to stay stable and secure, which ultimately protects the deposits of their customers.
Okay, that makes sense. So Public Bank Berhad, they're doing okay in this department.
They actually consistently boast low impairment ratios.
Good to hear. But how can we, just looking at these reports, actually assess asset quality? What clues should we be searching for?
There are definitely some things hidden within the report that can give us some insight. The breakdown of loans by type, maturity, their geographical distribution, these can tell us a lot about their lending practices.
Okay, so we're looking at the types of loans they're giving out, how long those loans are for, and where they're lending the money.
Exactly. We can also analyze the movement of impaired loans, how much is written off, the amount they're able to recover. Piecing all that information together gives us a clearer picture of how they're managing risk in their lending activities.
We're like financial detectives here.
In a way, yes.
Okay, let's move on to another important topic. Capital adequacy. Why is that so crucial for a bank's health?
Capital adequacy is like a financial safety net. It allows the bank to absorb unexpected shocks, think economic downturns or unforeseen events. It's about having enough reserves to weather any financial storms that might come their way.
So it's about having a buffer to protect against potential losses.
Exactly. Regulators actually impose strict capital adequacy requirements on banks. It's all about ensuring the stability of the entire financial system. Public Bank Berhad, they consistently maintain capital ratios well above those minimums.
That's good to hear. I see here their Common Equity Tier 1 capital ratio is 14.867%. What does that number actually tell us?
That ratio, CET1, it's one of the most important measures of a bank's capital strength. The fact that they're so far above the required minimum, it's a good sign. It tells us they've got a healthy cushion to absorb potential losses, speaks volumes about their risk management practices.
I'm starting to understand how complex running a successful bank really is. It's not just about making profits. It's about managing risk, making sure operations are efficient, staying in line with all those regulations.
It's a constant juggling act, for sure.
Well, I feel a lot more informed about how the bank works and how those inner workings could potentially impact me, whether as a customer or an investor. But we can't stop here. We need to look ahead, right? What does the future hold for Public Bank Berhad?
That's a great question, and it's a perfect transition to the final part of our deep dive. We'll delve into their strategic initiatives, look at the challenges on the horizon, and explore the opportunities they're pursuing. So stick with us as we explore what the future might have in store for Public Bank Berhad.
All right, welcome back to our final segment on Public Bank Berhad. We've really gotten into the nitty-gritty of their financials, their performance, their strategies, even some potential risks. But now it's time to look ahead. What's next for Public Bank Berhad? What's on the horizon for them?
Well, their report sheds some light on their future plans. One thing they're really focusing on is supporting homeownership and small to medium enterprises.
Okay, makes sense, but how?
Through digital platforms, primarily,
Yeah.
which is a pretty smart move if you think about the rapid growth of digital banking and people just wanting more convenient access to financial services.
So it's about adapting to those changing needs, meeting customers where they are. It's like they're bridging the gap between traditional banking and that digital world. But how do they stand out? I mean, it's a pretty crowded market out there.
Well, that's where their focus on technology comes in.
Technology.
Yeah, they're leveraging digital platforms, coming up with innovative solutions to streamline processes, maybe even offer more personalized services, reduce costs.
Ah, so they're not just going digital, they're actually using technology to enhance that customer experience. Now, besides the whole digital banking push, the report also mentions their expansion into wealth management and unit trusts. Why is that a strategic move for them, and how does that affect, the average person who's just trying to manage their finances?
It's a smart move on their part because there's a growing demand for investment products and wealth advisory services. People want to make their money work harder for them, especially with all the economic uncertainties out there.
Right.
Unit trusts, for example. It's a way to pool your money with other investors, gives you access to a more diverse portfolio, maybe even investments you wouldn't be able to make on your own.
So it's about providing more options for people to actually grow their savings, really plan for their financial future. And Public Bank Berhad, they're in a good spot to tap into this market, right?
Absolutely. They have a strong track record, they're financially stable, which definitely builds confidence for potential investors. Plus, they already have a huge customer base, a ready-made market for their wealth management products.
Seems like a good move for both the bank and their customers. But let's not forget about those challenges we discussed earlier. That challenging operating environment they mentioned. How are they planning to deal with that?
They're definitely aware of those headwinds, especially in some of those overseas markets. Remember that Goodwill Impairment charge related to their Hong Kong operations? It just shows those pressures are real.
So it's not all sunshine and rainbows.
Mm,
There's some real risks, real obstacles to overcome.
of course. No business is immune to challenges. But what matters is how they respond. The report emphasizes their commitment to strengthening their risk management, making their operations more efficient, staying ahead of the game when it comes to tech.
So they're battening down the hatches, preparing for those potential storms.
Exactly. And they're not just focused on that. They're putting a lot of emphasis on sustainability, both in their own operations and their lending practices.
Sustainability, Colin.
Yeah, green financing, responsible investing, it could really attract a whole new segment of customers who really care about the environment, want their money to reflect their values.
That's a good point. More and more people are thinking about that, the impact of their investments. It seems like Public Bank Berhad is really taking a long-term approach, balancing their growth with smart risk management and a focus on sustainability.
Absolutely. And that's what makes these deep dives so interesting. It's not just about numbers, it's about understanding the bigger picture, the strategies, how those decisions could shape not just the bank's future, but the entire financial landscape.
It's been an eye-opening journey, for sure. We've really gotten into the details of their financial performance, their plans for the future.
And hopefully, our listeners now feel more confident, like they can actually understand those financial reports, see the stories behind those numbers, and use those insights to make better financial decisions.
Exactly. Because every financial report, it tells a story. Learning to read that story, it empowers you, whether you're thinking about investing, choosing a bank, or just wanting to understand how the financial world works.
So as we wrap up our deep dive here, we just want to encourage everyone to keep exploring, to stay curious. The world of finance, it's constantly changing, and those who stay informed, they're the ones who thrive.
Couldn't have said it better myself. Thanks for joining us on this deep dive into Public Bank Berhad. Until next time.